Greetings, members, one and all of the Salivation Nation. This nation sold almost half their gold reserves. I'm going to tell you why it was a very smart move. Let's explore. Normally, I would advise against selling your precious metals. It's mostly advised not to do that if you're a central bank, much like Canada did, and also the United Kingdom, famously back in 2002, I believe. They sold off almost all their gold at the lowest price possible. But Sri Lanka, on the other hand, sold down almost half of their gold reserves as foreign exchange reserves drop. This is an article from Economy Nest that I found. I found it was quite interesting. In this chart, we can see of their purchases from around 2019. Sri Lanka's central bank began to buy gold more aggressively as reserves went up and also engaged in some trading. So it looks like they've been doing it at a certain time and levels here. We can see the central bank estimates here between these here and the central bank gold stock. Let's take a look at the article. Sri Lanka has liquidated a part of its gold holdings in December 2020 to boost liquid foreign assets in line with a drop in annual foreign reserve holdings, Central Bank Governor Nivard Kibral said, even as year-end reserves were boosted with a swap from China. The central bank is estimated to have sold about 3.6 tons out of a 6.69 ton stockpile of gold, which is about 215,000 troy ounces it had at the beginning of 2021, leaving it with around 3 to 3.1 tons of gold. In 2020, also the central bank sold 12.3 tons of gold after starting the year with 19.6 tons of gold. The gold sales were to boost liquid reserves, Governor Cabral said, and that is the case for most of us why we sell our gold. What is liquid reserves? Well, it's the most liquid assets we have. And then what is that? That's typically cash. Cash is really the most liquid asset that you can have. It's the most easily exchangeable, and so therefore that's why anyone would sell gold. We would sell gold in order for large expenses, unexpected expenses, emergencies, that type of thing, because most people don't take gold as payment, or silver, for that matter, even though we do consider them as money. Gold and silver are commodity money, and that is how central banks regard gold in their holdings. In this case, Sri Lanka sold that gold in order to increase their liquid reserves. So when reserves reduce, we reduce the gold holding, Cabral said. We bought gold when foreign reserves were going up. In other words, the reserves of the amount of, the dollar indexes or whatever were down and gold went up. Once the reserve levels increase over $5 billion US, the Central Bank of Sri Lanka will consider increasing the gold holdings. Sri Lanka's gross foreign reserves picked up $3,137 million US in December after dropping to $1,588 million US in November. Though reserves were down from $5,665 million at the end of 2020. So essentially what did they do? They sold while it was high. They sold at the right time when gold was high. It's the fourth year running that Sri Lanka has sold gold. Of course, all of those times it may not have been at the top of the market. In fact, the top of the gold market was in August of 2020, all-time high in nominal dollars. In 2009, Sri Lanka bought 15.8 tons of gold from the International Monetary Fund. After selling in 2010 and 2011, Cabral bought 3.6 tons of gold in 2012 and 9.3 tons in 2014 as reserves recovered amid deflationary policy, which is sterilized purchases of foreign exchanges. So that is just it. When aggressive buying, when Governor Cabral was running the agency in a previous term, is how it's occurred there. And in 2014, gold prices were much lower, on the way down in 2012. From 2014, September, Sri Lanka's monetary policy deteriorated with large liquidity injections made to target a call money rate, despite operating a peg and sharply less rule-based policy being followed under flexible inflation targeting and flexible exchange rate. Sri Lanka sold gold in 2015, 2018, and in 2019, but did not buy any back as reserves fell in line with liquidity injections. So therefore, they're being smart in terms of their foreign exchanges along with their gold holdings. And they're a small enough nation that that's probably the way they need to kind of operate to survive. They're going to kind of play the market, so to speak, whereas larger nations like China and Russia are less likely to do that as often. And they don't need to. The United States, by the way, is not adding or selling any gold. And certainly nations like Canada and the United Kingdom sold at the wrong time. Sri Lanka started the current bout of inflationary policy around August of 2019, repurchasing bonds from the market, remonetizing past deficits. Essentially, these repurchase agreements from their central bank is much what we did here in the United States. This is when foreign reserves were $8.5 billion US dollars. Such soft pegs end up at the International Monetary Fund until laws to end the discretionary injections are brought or there is a shift to a clean floating regime. Gold was the anchor for monetary policy until liquidity injected to boost employment by the Federal Reserve led to the collapse of the Bretton Woods system as confidence in the U.S. dollar pegged to gold declined and interventions were sterilized to keep rates down. In 1969, U.S. President Richard Nixon, backed by Keynesians, sacked longtime Fed Chief William McKenzie Martin to stop him from raising rates. He was replaced with Arthur Burns, who ended the remnants of a 300-year-old gold standard, created a commodity bubble known as the first oil shock, and killed off the Bretton Woods system. In 1970, the U.S. sold 699 tons of gold and a further 769 tons in next year to provide convertibility and mop up dollars. Wow. In August 1971, however, Nixon suspended convertibility and floated the U.S. dollar, blowing up the Bretton Woods system of soft pegs. I thought that happened in August, but nonetheless, another 486 tons were sold in 1972. That's a lot of gold we've sold in that time period. This is amid a short-lived deal called the Smithsonian Agreement, ended the gold standard forever, and giving almost unlimited to monetary authorities unlimited access to monetary authorities to inflate money supply and prices at will. And we know what happened. This doesn't say anything here, but in 1973, really what saved the dollar was Henry Kissinger, who negotiated with OPEC and nations like Saudi Arabia to create what is known today as the petrodollar, which has really less influence now than it did in the 70s, 80s, and 90s, and 2000s, early 2000s. But it's still there, and it's actually been strengthened again by OPEC nations. Now we're dependent more and more on foreign oil thanks to this current regime. So there you have it. Fascinating indeed, but Sri Lanka playing it smart in how it buys and sells gold. They can't always time the markets, but it looks like they've done a fairly good job here. Let me know what your thoughts are in the comment section below. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.